education piece from Signal Centre. We're going to be talking about trends, and we're going to go through the basics of trends, trying to explain a little bit about how we define a trend, how we look for a trend, and why that's good. There's lots more to go into, but for a start, we'll start with the basics, and that is always the best way to do. Build the foundations and then move on from there. So in this PowerPoint presentation, I'm going to talk about the basic technical analysis and a few basic pointers about that. I'm not going to go into too much detail on that. And then we're going to go into definition of trend, and then we're going to look at trend direction and also trend time horizons, because when we talk about trend, we're not just talking about, we could be talking about a number of different trends, both longer term trends, medium term trends, short term trends, but that'll be explained as we move along. In here we've got just basic graphical images, and we can see from here the arrows pointing up. Here we're looking sideways, and here we're looking downwards. That is a basic representation of a trend, and that's the three different trends that we're going to be talking about today. Now, in technical analysis, what we believe is that the market discounts everything. Market price action discounts everything. So when we're looking at a price of anything, we expect the market participants to know exactly all the information that's available, and that will feed through into the price. Now, on a shorter term timeframes, there can be when trades are entered or market prices move. This can be down to a whole host of other things that are going on in the market. It's a little bit of a supply and a demand effect, but overall price should contain everything. And what we do tend to find is that price does move in trends. It just doesn't go up in a straight line. It will be a move up, will be full of peaks and troughs in price, and this gives us an indication of whether price action is in an upward trend, is in a downward trend, or is in a sideways trend or a market range. And we also tend to find that history repeats itself. So we're all human. There's a lot of human participants in trading in any sort of asset or commodity, and we tend to repeat the same things that we've done in the past, so make the same mistakes and things like that. So we're looking at primary, secondary and short-term trends. So here we've got a typical chart, and this is a chart which I printed off yesterday, and this is of the Dow, and we can see if we think about it, a trend is defined as the general direction of something. It's so when we're talking about a financial asset like the Dow, we can see that as time progresses, the general direction of the Dow has been up, and we can see this, and we can see it hasn't just gone up in a straight line. It has been full of peaks and troughs all the way up. And this is where, but from this we basically say that the primary trend, which is the trend considered to be 3 months or more, so 3 months up to years, the primary, and this is a monthly chart, so the primary trend is definitely up. It's up all the way to here, and we can see that there is some recent price market action which has seen a change in trend. So we'll talk a little bit more about that as we go on, and we can talk, this is a great way to highlight the different time frames. So we look at the primary trend being a 3 months plus, so 3 months anywhere up to years. Intermediate trend would maybe be something like 3 to 4 weeks up to 3 months, and the short-term trend is anything from intraday up to 2 or 3 weeks. So that's how I look at it, and that's seems to sort of like hold quite well. So defining a trend is basically, first of all, the direction of the movement, as I explained, and the direction of the peaks and troughs. This can be a very good indication of if peaks are continuing to form new peaks, troughs are going ever higher, then we're in that upward trend. Then if all of a sudden we get a trough takes out the previous trough, or a dip in prices is taking out a previous low that we had, then that's potential warning that there may be a change of trend coming. We don't generally jump from upward trend to downward trend. We would most normally we'd go through a range trading period or a sideways trend before that we can say it's a downward trend. So we can sort of highlight the trends in a number of different ways, and again, these can all be presentations on their own. Drawing trend lines, for instance, that's a very straightforward and easy way to define a trend. Moving averages, Ichimoku cloud, and there may be more advanced presentations, and we will cover them in the future. So look out for them. But initially, we'll just look at the trend direction, and we can represent it with this big green arrow. We can see the trend direction. The prices are moving higher. The troughs are moving higher. These troughs here, these like dips in pricing. And right at the end, we've got a real big black candle, and this is negative. And this, but we got to remember that this, over the longer term, the upward trend is intact. And we have moved on the short term time frame. There is obviously an aggressive move to the downside. So this takes us into, let me just highlight the peaks and the troughs that we've had. The peaks are getting higher, the red arrows, and the green arrows are going up. So clearly defines an upward trending market. Here we've drawn a trend line in. Now, trend lines are, as I say, we can have a whole PowerPoint presentation on trend lines and how to draw a trend line properly. And what we tend to find is we connect the lows of the candles that are formed on the chart, and this has to have at least 2 points. So you'll have the starting point, the second point, and then normally what we'll do is any price action that comes down to test it. That if we look at this third point here, price is reacting higher, that means the trend is being maintained. And again, we can sort of like draw upward trend lines and downward trend lines, and they can be a great visual aid in defining what the trend is at the time. Now, if we're looking at trends over different time frames, this is where we actually we actually sort of like differentiate from the primary, the secondary, and the short term. So the 3 different time frames that we got to look at. So if anyone ever asks me, is a Dow, what's the trend in the Dow? I'd have to first ask what time frame you're talking about, because if we look at the last few weeks of price action, which has been very negative, the short-term trend is clearly down. Even the intermediate or secondary time frame is clearly down. The primary major trend is up, but maybe going through a transition period where we're going from an upward trend to maybe a sideways trend, and that will play out and be sort of like, that could be changing on a daily basis, the way the wild market is swinging about nowadays. And here we've got different size arrows, and I'm trying to differentiate between the primary trend, the rising peaks and troughs, but then you've got the red arrows, slightly bigger than the small arrows. You get these small arrows, which is the short-term trend. You'll have rallies and sell-offs within an intermediate time frame. So all the time frames are all linked, and it's like what we talked about when we started. Price action just doesn't go up in a straight line. You have this peaks and troughs or waves all the way up. And so within the primary trend, you'll get an intermediate trend, and within that intermediate trend, you'll get the short-term trends. And they're all linked. So whenever you're looking at a price on a chart, contemplate what the longer-term trend is doing and what the shorter-term trend is doing if you're talking about trying to define the intermediate-term trend. It's really important to understand that. We have the impulse move higher, and we have corrective moves happening all the time. So for the longer term trader or investor, he'll be more interested in the primary move. For the swing traders, they're looking for the intermediate moves where they can capture a decent amount of profit from going against the primary trend, and the short-term trader, the intraday trader, will be looking at the short-term moves, and they'll be looking to capture alpha there. Oh, let me just skip that slide. So trend direction, very clear. There's three, but there's also there's different. You can have the upward, the downward, the sideways trend, but you also have the primary, the intermediate, and the short-term overall ranges that we're looking at, or time frames. The upward, the sideways or the trading ranges are probably the most difficult to trade. They're the ones that get hit with the reactive news that we get, the headlines, the numbers, whereas the upward trend is a lot easier to predict. You can see the upward trend very clearly on a longer term time frame charts. The same with downward trends over the primary periods, the 3 months plus. You can clearly see them in charts as well. But the sideways trading range trends, which the market is normally in a sideways trend if you're talking about day trading. So you've got to try and work out what sort of trader you are and which time frame suits you the best. You may well be a buy and hold type trader, or have a longer term outlook on things. You may be a fundamental trader who looks at the mechanics of the company, how it works, and then you go to a chart to sort of try and use a chart as to help you get that entry price. And you can use moving averages and trend lines to help you find that entry price. So fundamental analysis and technical analysis can go hand in hand, along with sentimental analysis. Again, PowerPoints for another day. So more arrows on here, the different trend directions. So during all this primary trend, we've got so many the market moving in so many different directions. So just think about that and don't react too quickly to intraday moves that you see. Try and have a little bit of a look at the bigger picture. You always tend to find that you can. In fact, what I'll do is let me get a live chart up. This might be quite a good way of showing you. Yeah, let's bring this up. So this will be the chart that you're seeing on the PowerPoint, and we can see all these different trend directions. This is a weekly chart. Let's break it down to a daily chart. And we can see, again, we've drawn trend lines on here. Let me get rid of the Fibonacci lines. That's another slideshow. But here I've drawn horizontal trend lines. They can be helpful as well. And this is in the sort of the phase of the market that's actually changing. So for us, this is an expanding wedge formation, and this is notoriously difficult to trade. You can see that now we're looking at the range potential is ever expanding until the market settle down and find a trend which can be defined more clearly on the weekly chart. So currently at this point in time, we're going through this short-term intermediate downward move. You'd like to think that the upward trend is still intact, but if we get down to levels around about 15,000, then that is brought into question again. So when we look at markets, we can easily see them having decent corrections, even up to a 60%, sometimes a 78% retracement, without impacting the longer term move. But this is obviously one of those times where there's a lot of uncertainty going on in the world at the moment, and the Dow is showing this through the chart. If you consider in the last 6 weeks, we've basically leveled off, and we've reached prices that we were trading in 2015. So 5 years worth of growth in the Dow has been hit in 5 or 6 weeks. Quite extraordinary. So let's move that out of the way and just finish off the presentation. Yeah, so I think the main points to take away from the presentation are the defining a trend, finding a trend or a time frame that you're very happy with to trade, understanding what the longer term trend is doing if you're a swing trader and the short term trend is doing, and using them tools that we have, trend lines, moving averages, Ichimoku cloud for the more advanced, and using them sort of tools to help define the trend, because we always know that the trend is the friend. If you can stay with the trend over a sustained time period, you've got definitely more chance of being more successful in trading. So thanks for joining us. You've got my contact details here if you want to ask any questions. If there's been any questions pinged out on the chat.
No questions, Steve. All good.
Excellent. All right. Okay. Well, thanks for joining us again. Joe will be presenting a PowerPoint this afternoon. What are you doing on, Joe?
I'm going to be looking at stop loss placement, trying to be a bit clever with where you place your stops.
Excellent.
So yeah, that'll be 12:30 this afternoon.
Brilliant. And then Ian will finish off the day.
He's talking about multi-time frame analysis.
Excellent. All right. Well, thanks for joining us, and I hope you enjoyed it. Any questions, ping us. Thanks a lot.
Cheers.
Cheers. All right, mate.